a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
After underperforming in 2018, aerospace and defense stocks and ETFs seem to have turned around, and now they're outperforming so far in 2019. Here to talk about that with us is Nina Mishra, our ETF Research Director. Why the turnaround?
So as you mentioned, last year, particularly in the fourth quarter, they underperformed the broader market. They were beaten down mainly because of trade-related concerns, because these companies typically have a lot of international exposure. So this year, progress in US-China trade talks has helped these stocks. There are other reasons too, but that is one of the main reasons. President Trump has mentioned that if these stocks continue to progress, then he is willing to extend the deadline of March. Earlier, March was the deadline, so he's willing to extend that deadline before imposing further tariffs on China. And Treasury Secretary Mnuchin and Trade Representative Lighthouser, they are in China currently for those high-level talks. In general, there's a lot of optimism that those trade concerns, those will be sorted out. So let's see what happens. And then defense spending continues to rise. In the U.S. also, Trump administration has boosted military spending, and other NATO countries are also stepping up their defense spending. And during his State of the Union address, Trump did mention about securing $100 billion in additional spending by NATO allies, and he also reaffirmed his commitment to boost defense spending. And in fact, most company CEOs during their earnings conference calls, they said that they expect defense spending to rise in general. Then most of these companies have reported very good Q4 results. Boeing in particular had blockbuster Q4 results, and stock soared after that. And Boeing is the one of the top companies, and it is a top company in the industry. And other industry leaders, including Raytheon, Northrop Grumman, they also reported better than expected earnings. So that has also supported these stocks. Those are the reasons for outperformance. Now, if we look at the longer term picture, global air traffic is rising, particularly in developing countries, because middle class incomes are rising in those countries. So air traffic spending would support the commercial side of business for these stocks, but there are concerns about, if those trade negotiations do not work out, if US and China do not arrive at a trade deal soon, then that could hurt these stocks. And there are concerns that because fiscal deficit in the US has been rising, if it continues to rise, continues to widen, that maybe after a few years, defense spending will have to go down. So those are the concerns with the sector.
Okay. So against that backdrop, let's take a look at some of these that you want to share for us with us for examples. iShares, U.S. Aerospace and Defense ETF, ticker ITA.
So these are the only three non-leveraged ETFs in this space. There's one leveraged ETF too.
Okay.
So let's take a look at the iShares product. It is the most popular product, most popular ETF in this space. It has an expense ratio of 43 basis points. It is a market cap weighted ETF. So let's take a look at this ETF. Zacks ranked number 2. You can read our research report and go to the external home page, the iShares web page for this ETF, and look at further details. Now, as I mentioned, it's a market cap weighted ETF, and Boeing is the leader in the industry. So you can see that Boeing gets almost 12.5% allocation. So obviously the fate of this ETF will depend a lot on Boeing. Other industry leaders including United Technologies, Lockheed Martin, Raytheon, they also, Northrop Grumman, they also get a lot of representation in the ETF. So let's take a look at the second one now.
Second one, Spider, S&P Aerospace and Defense ETF.
The ticker is XAR. It's a modified equal weight ETF. So most of the holdings, they are in almost equal weights with some caps on large, mid, and small cap stocks. So those sizes have certain caps. Now going to the web page for this ETF, you can see it charges 35 basis points in expense ratio, so it is the cheapest in the space. You can go to State Street web page for this ETF, look at more details. Now, as I mentioned, it is an equal weighted ETF, so you see that all the companies, Boeing, you will see similar holdings, but smaller companies also get equal representation in the ETF. So this is not, the performance of this ETF is not solely dependent on performance of Boeing and other industry leaders, like in the case of ITA.
Okay. And then Power Shares, Aerospace and Defense Portfolio.
The ticker is PPA. This is also a market cap weighted ETF, but it follows a slightly broader index than ITA. The same kind of weighting methodology, but index is slightly broader. So it includes some other companies also, in addition to pure aerospace and defense companies. So take a look. Let's take a look at the ETF. It is the most expensive one in this space with an expense ratio of 60 basis points. Let's go to the website, Invesco web page for this ETF. And as I mentioned, this is a slightly broader index, so it includes companies that are involved in the development, manufacturing, operations, and support of U.S. defense, homeland security, and aerospace operations. We can take a look at the portfolio here, and you will see same companies, slightly different weighting compared to ITA because of the broader coverage, but still industry giants get a lot of exposure in this ETF too. Now, I was trying to find if I can find the industry exposure. Okay, that's not available here, but it would be available on the fact sheet of the ETF. You can take a look there.
All right, let's compare them.
So on this slide, I have the performance of these three ETFs, ITA, XAR, and PPA, and I've compared them versus the S&P 500 index ETF, SPY, as well as versus the broader industrial ETF, XLI. So the Spider product, XAR, was the best performer, 19%, but the other two also were not bad at all, up 18% almost. In 2019 and this year, the industrials ETF had about 15%, 15.5% return, whereas the S&P 500 index is up a little more than 9%. So these ETF, particularly XAR, had almost double the performance of the S&P 500 index.
Okay. Do you own either one?
No.
All right. Thanks for that. And always more ETF information, commentary, articles in the ETF section of Zacks.com. The Funds tab in the top toolbar will help get you there. Don't forget Nina's podcast on the podcast page of Zacks.com. It's called ETF Spotlight. A lot more interesting information there on ETFs as well. With Nina, I'm Terry Ruffalo.